wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M+Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Good evening, ladies and gentlemen. Okay, before I start, I want to test if you guys can hear me well. So if you guys can hear me, please type yes in the comment section below, okay? Please type yes and help us to like and share this video today, because you are going to want to share this video and I'm going to let you know why later. Okay, so once again, we are approaching the final quarter of the year, okay? Staying at home definitely makes the time goes by so fast. If the time is going by fast for you guys, please type yes also in the comment section, okay? Because it's definitely going too fast for me this year. So new quarter means another market outlook once again. So our research team can provide you an insight on what's coming ahead, okay? The sectors of stock you can look at, what you can keep your eyes on. So you can find out, is it really a time for recovery, or are tech stocks still in trend? And will growth ever make their comeback? Okay, to find out all, stay tuned for the whole presentation. And of course, today we have none other than Louis, our head of research, to bring you through the insights of this final quarter. Okay, let's get Louis on board. Can we have Louis on board? Okay, I think a lot of people here. I see Rukumani, I see Irene, I see Rafik, Jatinder, Brandon, hi everyone, Andrew, Aaron. We got Yo, Muhammad Razif, Lucky Ong. We got a lot of people. And I think Louis is facing some technical errors for a moment. So do stay tuned for this moment. Okay, we got Louis on board finally.
Yes, sorry about that.
What happened? Why did we lose you there?
I think there was a connection issues, but it's okay. I
Alright.
resolved it. Yep.
Okay,
All right.
okay. How
Hi
are you doing
everyone.
today?
Good, good. Yeah, just trying to stay at home as much as possible. I know that a lot of people has been going out, so I will still be more conservative and stay at home right now.
Yeah, I'm still waiting for my 14 days to end. The only thing I want to go out for is to get my hair cut.
Oh yeah, that is very important
Yes.
under this
Yes,
situation.
yes, yes. So I think after tonight's show, you guys will see a different haircut in the next live. Okay, so do you mind bringing us through the agenda of what will the audiences will go through today?
So I guess today we are going through the market outlook, and certainly in fourth quarter there will be a lot of variables that we need to attend to, especially when right now a lot of people are talking about this tapering, taper tantrum, and all these China issues. So hopefully that we can still able to find some good quality stocks that we can try to trade or even invest during fourth quarter, especially right now is already the final quarter, and as everyone will be waiting for what is going to happen in budget 2022 and what is going to happen in the window dressing period. What are the sectors to look at? I think those are the things I will cover later on. Yeah.
All right, can't wait. That's a lot of content. So everyone do make sure you tune in for the whole webinar to find out how you should play your game in the market for the next coming quarter, okay? Because not only the content today is awesome, we will also have a touch and go e-wallet credit giveaway, okay? And the price is going to be bigger because it's a final quarter, so we're going to give out a bigger price today. Not only a total of 300, but the price will grow as the amount of viewers grow. So that's why you have to help us to share this video, okay? So that when there are more viewers, the price will be higher. Let's have a look at the terms of this giveaway first, okay? Okay, so we'll pick five from the audiences to answer the quiz correctly. Okay, top fan. But if you are not top fan, you still have a chance. You just have to share this video. And if you see the mark sharer on your name, you might also stand a chance to win the prize. Okay, so the first prize will get 100, and the rest of the four winners will get 50. And the prize pool will increase with every 100 viewers. Okay, 100 ringgit for every 100 viewers, which will be divided among the winners equally, starting from the 200 viewer mark onwards. So here's an example of the price that you can get. Can we get the slides on? Okay, so if we're at 200, there'll be an extra 100 in the price. And if you go to 300, 400, 500, it will increase by 100 for every total amount of viewers. Okay, so do share this video so that more and more people watch. We're already at the 200 mark, so there's already 100 ringgit added to the pool right now. Okay, so as it progresses more, we will add more. Okay, so now that you guys understand this, let's have a look at some important links that you can get from M Plus Online. Okay, so if you are new to M Plus Online, you don't even have an account, you can visit registration.mplusonline.com and register. You can just do it online. You don't even need to go to our office now. Okay, and you can read articles at mplusonline.com/blog. Okay, that's mplusonline.com/blog. And for research report by our wonderful Louis here, you can go to mplusonline.com/research-reports. Okay, and every Monday we will have a weekly market update right here on Facebook or YouTube at 12:30 p.m. And every Wednesday we will also post the latest news and updates on the market and whatever is happening in the local or global market every Wednesday on our Facebook. That's why you should follow our Facebook, because we have a lot of content that is useful for you. And if you missed out on our videos, you can catch them on our YouTube page. Okay, that's the link there. And also, if you are new to using the M Plus Online platform, there are also guides that you can get there. And whenever you need help, you can contact us at support@mplusonline.com.my or PMCT on Facebook, our chatbot. Andrew here is asking how to be a top fan. To be a top fan, you have to continuously interact on our Facebook page, comment, share our videos, whatsoever. It takes some time. It's not picked by us. It's based on Facebook's algorithm. So it takes some time to become a top fan. You have to be actively interacting on the page. All right. Okay, so now that we're done with that, I think it's good that we show you the questions of today, the question of today's quiz. Okay, so what is the target GDP growth rate of the 12 Malaysian plan? Is it A, B, C, or D? 3 to 4%, 4.5 to 5.5, 5 to 6, 6 to 7. So if you have the answer, you can put it in the comment section, and we will also, there might be on the slides, I'm not sure because Louis did the slides. So you guys have to tune in to the whole webinar to find out the answer, okay? Okay, let's not waste any more time and let's move on to the market outlook, okay? Thank you, Louis. The floor is yours.
Okay, thank you, Don, for introducing so much of all these prizes and also the questions as well. I think everyone would be able to answer that once you have gone through the slides later on with me. So I'll just start off with this market outlook. I think it is very interesting that we have gone through 1.5 years of pandemic, COVID-19 pandemic. So I think everyone will start to every now and then people will talk about how much cases, but right now we are immune to cases. Then right now people are talking which states are going into phase 1, 2, 3, or 4. So I guess right now it's a time that we turn pandemic into endemic. So I would my title for this quarterly report or quarterly outlook is recovery begins with an endemic. I think everyone is right now understanding a situation of COVID-19 is still there. We have to really live with it. We can't, break the chain for the time being. So that the best is to live with it, and hopefully that the cases of infection rate will still continue to stay low, and then the business will return to normalcy by 2022. So that is the very best hope that we can get out of it. So, but again, when things are on the recovering side, what are the things that we can actually go to invest in? So that is a very important question. And right now, we are heading into the maybe phase 2, phase 3, or phase 4, depending on which states are you in. Then we are looking into some of the business recovering. So if those sectors that has been bashed down badly during COVID-19 pandemic, I think it is worthwhile looking at it, because right now it's all the way up because on the back of the recovery team. So hold on a second. Yes, wait. Hold on a second. Is this better? Okay. Okay. So I'll go through the COVID-19 situation, mobility trends. I think these are the two important factors to take note of, because when we know that people are already traveling into certain places, therefore it is considered good for us to look at the economic recovery theme from this point onwards. So later on, I'll go through the impact from COVID. I think most of people will cover this, and I'll try to do some market review. And we'll talk about the strategy and talking about the National Recovery Plan, and also the budget, and also the 12 Malaysia Plan. I'll just briefly go through that before we go into the stocks and sector selection. Okay, so on this chart itself, you can see that confirmed cases continue to be staying around 300 to 400,000 in the global arena, but the death toll actually is not really catching up that fast, that quick. So which means that the death rate is around near to 2%. So I would assume when maybe we are hitting less than 1%, then that would be the position whereby they can reopen the travel borders. And travel borders is very important to a lot of countries, because like even in Thailand, even in Malaysia, a lot of our tourists comes in and spend money here. So if we are unable to open up the international borders, then that will be a very dire situation for us to only recover with the domestic catalyst, such as construction. So I think the death rate here is very important for us to take note. Once people starts to reopen their international borders without really quarantining people when you travel, that is the best outcome that we can get. Because if you are traveling, to some places and you can't you can't enjoy it throughout the 2 days because you need to quarantine 3 days there and back here 3 days. Back home at 3 days. You only spend 2 days at maybe Thailand or wherever it is, and that is no fun because when you need to open the international borders, you need to open with meaningful, meaningful trip. So you can't be, the trip there is only 2 days, but you have to quarantine 6 days. So that doesn't make sense. So even if the international borders is, uplifted, you need to have a meaningful SOPs to go through. So I guess when that happened, it is when the death rate will go below maybe 1% or 0.5%. That would make sense. Okay. So on the COVID-19 indicators, I think most of our Malaysian COVID-19 indicators are pointing downwards. So that is a good sign. And Selangor was hitting 8,000, a few months back, but right now it has already hit around maybe 1,000 to 2,000. Sometimes it is below 1,000. So I think Klang Valley itself is the most important place for Malaysia because 40% of GDP is contributed from Klang Valley itself. So if we can reopen into phase 2, phase 3, or phase 4, then that would really help a lot in terms of our recovery. So since that right now we have already turned into phase 2, that is already a good sign. Okay, so most of the indicators are down, so that is already good for us. Patients in ICU, but again, don't be too confident on it. You have to also do your SOPs and all these measures. I think it is. Even with vaccine, I still heard people have this vaccine breakthrough, which is COVID-19 can still infect those vaccinated people. So I think better to be safe as well here. So hospitalization rate is the measure that the government is looking at. So make sure that if this can go down to a certain level, then they will start reopening in a more aggressive manner. Right now, they are already opening. Just that we have to really take note of all these indicators in order for us to see whether the international borders will be able to reopen, because that is actually the last crucial part about the economic recovery in Malaysia. We cannot only depend on the internal side of things like construction, but right now, since that we don't have the international borders being uplifted, the only place that we can look at is domestic economy. Okay, so that is what we are looking at. So COVID-19 vaccination progress is good. It's very progressing well. Right now, you can see that the 12 to 17 years old has started to vaccinate, and also our adult population is already hitting above 80%. So that is also a good sign. And even the total population is around 60%. So I would suggest that right now everything is pointing towards a positive side, at least for the COVID-19 situation. Okay, and mobility trends is very important to take note, because we will know that when COVID pandemic hits us during March last year, and that was a time whereby a lot of places you can't really go, and you can't really walk, can't really travel. So if you take note of this part of the days when COVID pandemic started here, and a lot of things you can't go out, you have a lot of things are in the lockdown mode. So perhaps right now you can see that comparing the last year's March versus right now, you can see that it is more vibrant in terms of people using the public transport, people using walking out, at least they go to groceries wherever they are able to go out. So that is very important to understand whether the economy is actually running. Okay, so if you are in a negative zone, which means that everything is in lockdown mode, so that is not good for the economy. Right now, it is on a positive mode, which means that people have started to go out, and that is what we want to see. Okay, so United Kingdom is also on a very positive side. Singapore trends is barely neutral. I would say that it's recovering, but not as vibrant. I think a lot of people can still work from home. That's why they did not really travel out. But it's a good sign that at least they are not into the March period. Okay, so March period last year. So if they are going back to the negative region, then that will be detrimental to the economy. So what about Malaysia? Malaysia is also on the recovering path, especially after all this recent MCO 3.0 and we are able to climb above this baseline here. Baseline is means we are above zero. Above zero means considered as expansion mode. Expansion mode in terms of the economy has started to run, and a lot of times when I go out for groceries and things like that, I can see that a lot of people are queuing for food. That is one thing, and I think revenge spending is really there. It's really there. You are not able to spend over the past 1.5 years. Then you are only able to spend online. So e-commerce is on the boom, and right now you can go out. Definitely, you will spend more for your food, for whatever. There is a lot of impulsive buying here. So I think for consumer sector, it is also very interesting to take part as well. So come to another view in terms of these mobility trends. We want to know whereabouts are people going. So in terms of retail recreation, it is up. This up is actually up from 2 weeks ago. So the arrows here are actually showing from 2 weeks ago. Is there any improvements? So which means that last maybe 2 weeks ago it's around negative 38% in terms of retail and recreation. So people are not really going out that much. But right now it's slightly improving, but still not full force going out. Where are they going out? It is supermarket, pharmacies. This is an essential right now. You have to go and get masks, sanitizers. You have to get groceries. So these are the places to look at. And the other one is parks is down. People don't spend that much time there anymore. Maybe they didn't work, so they need to go to workplaces. So workplaces went up. And for mobility trends in the residence area, it is down. So people are spending less time at home, but spending more time at workplaces. But the public transport are still down, which means that people are still afraid that taking transport might get infected. So that are the based on the mobility trends, what I can deduce assume from this chart. So what is the impact from all this? In 2020, we have gone through a very severe pandemic, and therefore we are being locked down. And the only place that managed to capture a very good growth is China, because China managed to contain this COVID-19 much better than the rest of the countries. So that's why they have 2.3% of increase in terms of the GDP growth. But the rest of the world, US, UK, Singapore, and Malaysia, they are in the negative region. So I guess it is whether you can actually combat the COVID-19 much better than the rest of the countries, and you are able to being able to recover much faster. So given that all these COVID-19 indicators are down, back to I think a declining trend, and also the vaccination rate is near to 90%. When 90% is hit, I think PM said he want to have interstate travel to restart. So when interstate travel restart, then we would see more domestic tourism. Right now, Langkawi is already having this travel bubble pilot project. So hopefully they can expand into other places. So I think news articles were saying that Pulau Tioman, Malacca, and Genting is part of the next phase of restarting in October. So in that sense, we are likely to see recovery, because we are already dampened so much, negative 5.6% in last year. This year, we expect to grow by 4.1%. So this is just back to sort of recuperate our economy a bit. So I think most of the things that we can see from this point is actually from the exports and from some of the domestic sort of construction activities or economic activities that is actually pumping up the economic activities right now. So into 2022, that is very interesting, because if we can hit maybe, let's say, 90% or 95% of adult population, then maybe they will think about tourists from other nations can come in. Then when tourists are spending in Malaysia itself, then that would also reboot the economy to the fullest. I would say that by then we will see the fullest potential of our Malaysian economy. So just to give you a review that what has happened so far in the world. I mean, I just use some ranking here. Actually, Dow Jones is up. The STI's Straits Times Index is up. KOSPI is up. Shanghai Composite Index is up, and also KLCI is down for a year-to-date basis. So I think a lot of people have asked why is it Malaysia are in this negative region. I think we have a lot of issues that we need to settle in within ourselves as well. So in terms of over the past 1.5 years, we are also in this having some political uncertainty, and at least right now is being stabilized. So hopefully that this government can really execute, and we can see further upside into 2022. So that is the best hope that we can get out of this situation. So I think political scene is already stable, and when the election happens, then maybe by 2022, end of 2022 or 2023, that will be the time frame that you have to take a look again at your portfolio because of the election risk. Okay, so for now, I think it's quite stable. So the inner part, the inner catalyst has been resolved. So we are just waiting for the execution of most of the recovery team within Malaysia. So I think based on the current trend right now, it seems like already stabilized, and especially right now, the Brent oil prices is also heading upwards. That is also very interesting for us to take note, whereby a lot of times we are being viewed as this. We are being viewed as a commodity country as well, commodity country. So this is very interesting for us because when commodity is up, like crude oil is up, definitely it will benefit us. Like today itself, when crude oil has shot up towards above this $80 mark, we have it has benefited the oil and gas sector. Over the past 2 days, it has benefited. Okay, so that is the idea here. So on the broader market, which sector has been the leading one? You can see on the right side, we are just putting it three sectors that has been leading, and hopefully they can still lead towards another few more quarters. I would say that technology will continue to outbeat the market by far-fetched range because of if I've already mentioned quite some time in terms of why technology sector is good and should be worthwhile to look at more and more often, because when we talk about technology, we are not talking about just this year, next quarter, but if you look at the whole picture of 5 to 10 years or even 100 years, will you be thinking, or do you think that human beings will stop advancing from this point only, and they will not advance further from this point? The answer is no, because they will continue to advance further from right now. People are talking AI, machine learning, all these events out there. Even last time it's only electronic gadgets. Right now we have electric vehicles as well. So technology sector will continue to outrun the whole broader market. And to talk about that as well, we have also industrial production. If you look into our industrial production, why they are also in the top leaders ranking, although it is just around 10 to 15% year-to-date performance. But I would also ask you all to go and check if is the EMS players under industrial production, because if they are under industrial production and services, which means that they are also tagged along with the tech counters. So which means that industrial production not only have this gloves and also the steel related products, but the EMS players actually is part of the technology segment. They are parked under industrial production. So that's why you can see industrial production is also going up second. Then thirdly is transport and logistics. I think this one need not to say much. This is a core of the economy. And when the COVID pandemic started, this was being hit a bit. Then later stage, transport and logistics is the main is in the forefront, okay, because they need to deliver your online goods out, all this courier courier service is under these transport and logistic companies. So these are the parts that it is a leader in the broader market. The key laggards are actually plantation, energy, and also healthcare. So plantation, people will say that why is CPO up, but the plantation counters are down. I think there could be a reason behind it, which is related to ESG. Energy is also related to ESG. But right now, since that the US dollar, the Brent oil price has surpassed the US dollar 80, that could reactivate, this low base energy counters into higher position. But because when I was writing this report, it wasn't it hasn't triggered the US dollar 80 yet, but right now it has triggered. So which means that there is a very high potential that energy stocks will continue to outrun, and especially with those if I talk about energy counters, people think about oil and gas companies, but right now it's if the ESG is in if the ESG is having in mind, then oil and gas, how can they be ESG? So they need to tag along with something called renewable energy. Okay, so renewable energy, if the company has renewable energy and they are under oil and gas sector, that will be more attractive for people to buy. So right now there are two parts of oil and gas companies: oil and gas companies without the renewable energy, and oil and gas companies with the renewable energy arm. So if those companies that has renewable energy arm, I think it's worthwhile to look at it. Like today, I think Yinsen was the one that is spike up one time, sideways, and then spike up another time. So because they have some renewable energy arm, so I think people will look at those companies rather than just purely oil and gas companies. So that is just my idea. Okay, so retailers versus foreigners. So what has happened so far is retailers are still the net buyers in the market. I think it is a good opportunity for people to buy because I think retailers are in because they saw opportunity in various industries. But year to date wise, foreign investors are in a negative position. But do take note of this position here, whereby since August and also August till September. Actually, August we have an inflow of foreign, investment into equities around 1 billion, and in September to date, right now, I think it's near towards 800 to 900 million as well. So I think, the foreign investors have started to realize that we might have already gone through the worst part, whereby the inner parts of within Malaysia of the catalyst, the negative catalyst has been removed, and therefore people are looking at just purely the recovery phase of Malaysia. So I think that is very interesting for us going forward. Okay, just to give you an idea of what is the retailers' participation right now, we are near towards 35%, broadly speaking. In terms of 2021, the average range is around 38.4, but the recent few days we have been hitting around 38.4. So I think retailers are still there to continue to trade the market. I think that is very healthy because people start to realize that maybe I can make some money out of the stock market. So that's why they are buying into the equities right now. Okay, in terms of PE valuation, I think this is very important to take note. In terms of world index, it is the average, 10-year average is around 19.7, but right now it is at 24.2, 2 times PE. So if you are, having a view in terms of the fundamental side of things, you might be saying that 24.2 is actually much higher than 19.7 times PE. So why should we pay 24.2 right now? But people is actually paying right now at 24.2. But if you are having this view, yes, you are not wrong because the overstretch in terms of valuations are kicking in much faster, and when you see all these news media, people are actually talking about this again and again and again over the past few days and also few weeks. So yes, it is a very valid, genuine concern that we are paying quite expensive into world equities. In fact, if you look into S&P 500, we are paying around 26.7 times PE versus the average is around 19.5 times. So which means that it is definitely quite overstretched in terms of valuations. And even right now, I think when the negative things start to pick up in the media, like for instance taper tantrum, the Fed's interest rate hike, and things like that. So all these are actually pointing towards potential correction. But one thing you have to take note is that where does this correction should end and where can you pick up the shares? That is very important. So right now, you know that everything is pointing towards expensive, but whether do you want to wait for the correction to come in and where this correction will hit and rebound? So that is more important. So in my view, throughout the past 1.5 years, the S&P 500 did not really retrace a lot. You can see in the chart, it has rebounded off March 2020, and till now, there isn't any significant pullback except for September last year, this part, whereby they have retraced around, I think, 12 to 13%, if I'm not mistaken. So if this correction right now goes to around 12 to 15%, I would say that that would be a genuine or healthy correction for us to pick up. So as long as they are still staying above the SMA 200, so I am not too worried about that. So I will wait for the correct ends, and then correction ends, and then we want to see a good rebound again for S&P 500. But in terms of Malaysia, KLCI is quite cheap. In terms of our current position is 14.9 times PE versus 10-year average of 17.7. So what are people discounting from Malaysia? So that is also another question mark. You have to take note of this, because if we are so far away from the general view of the global indices kind of valuation, people might find emerging markets like us attractive, and people will buy because we are cheap and we have a range of 10 to 15% to move up. So I guess we are in a good position for foreigners. So that's why maybe the foreigners have identified that we are cheaper in terms of valuation, and therefore people are buying into our equities. So bear in mind, we are considered as still cheap, and we have a good potential of recovery. Okay. So in terms of technical wise, just like we are talking about fundamentals and PE valuation and things like that. But what about fundamentals? We can anticipate around this 1500 to 1530 range is the support. We don't see any more. I would say the downside risk is limited for the time being, and today itself is already breaking. Forming a bullish engulfing bar in KLCI. So that is a very wonderful position for us, because if you take note of this, this is when the foreigners are back in and it jacked up the price, it pulled back profit taking activities, but it did not fall below this 1530 and 1500 level. So this is a very good position for us to look out for a good rebound in terms of FEM KLCI. What about the small cap index? I think it's still able to form a good uptrend move towards the 16,600 points. But I would suggest that right now we have to take note of people are focusing back into big caps, and the small caps wise, people are not so favorable yet. I would say that when the whole situation turn around, it might be until when the budget kickstart. So budget 2022 is very important, because people will start to position ahead of that event in various sectors. Later on, I'll talk about what sectors that we can actually take note of. ACE market, I think you might want to. It's a bottom base formation building, and right now it's around 6,900 to 7,200. So there is a very good chance that if the big caps are going up higher and higher, then one day they will shift to the lower islands, which is the small cap and also ACE market. And when that happens, the ACE market will also being lifted accordingly in tandem with the big caps. So because of this base building formation, I would say that the risk is quite limited, and the rebound should be a good opportunity. The risk and reward is favorable to traders for the time being. Okay, another piece of puzzle that we need to solve, which is the US dollar MRR trend, whereby if we are on a weakening bias tone, that would actually benefit export players. So to think about what are the export companies that we have, or export sectors that we have gloves, we have technology sectors. So those are the two things that will rely on this. So as of this juncture, we notice that 410 is the support, and also 424 is the resistance. So hopefully that our ringgit will hovers around this range without a strong significant move. Because if this were to go stronger towards 4, then you have to shift your position much faster, maybe towards domestic counters, and leave out the export counters. So it depends on how you are shifting your portfolio. So this will be an indicator to position yourself within the export or domestic counters. So that is the idea here. Some people might trade gold as well. So gold still in the negative bias tone. So we don't expect a lot of attractive trading interest within all these gold proxies such as the Pokong, Tome. If this gold can actually surge towards 1900 or even higher, then people would actually start to take note of these gold-rated proxies counters. But right now, I think people will start to tone down lower in terms of the gold proxies. But I think they will monitor closely because during pandemic, people are talking about this gold to go up to 2000, 2005, and therefore a lot of leaning ups in terms of Tome and also Pokong, right? Okay, so talking about Brent oil, I think this has been within our expectation of breaking new highs because when things recover, economy start to move, and we can actually look out for recovery because people have restarted their manufacturing sector. People have restarted all these factories, and these are the ones that is contributing to the recovery in the Brent oil as well. So I think Brent oil right now is really above the pre-pandemic level, and it's above the $80 mark, and I would expect it to go up to 86. Perhaps this is also a very good indicator for our stock oil and gas counters. So I think very important to take note because when this continues to rise higher, maybe towards 86, then people will continue to look out for oil and gas counters as they are the laggard. Just now you have seen, right? Energy sector is really the laggard within the broader market. So if this really can surpass 86, I think there is no issue for oil and gas counters to regain their shine. But take note of those companies with renewable energy that will be more helpful for your stock picking. So if those companies that has diversified certain business arm into renewable energy, because even oil and gas companies, how can they achieve the ESG is only by getting some renewable energy into their portfolio. So that is how they are going to tune into the ESG part of things. Okay, CPO, I think everyone would understand that over the years we have not seen these kind of levels, but during pandemic and during this year itself, it has been making multi-year highs. Okay, continue to trade higher and higher and collapse, but it still maintain a move around this 4,001 above. So I'm also expecting this to continue to break out. Okay, don't be surprised that it might hit the 4,008 because based on the technical analysis point of view, it is definitely on an upward trending mode, and it has retested a few rounds around the 4146 level, and that is very crucial because it has retested but did not fall below that again, and this is after the correction phase, and this is rebounded, and this has been making sideways move. So this could be considered as a sideways consolidation and monitor for a breakout. So 4,500 points, if they can break out, then the next target will be around 4,008. So we just have to follow what is the market telling us. Right now it's uptrend, so we just follow it based on the technical analysis point of view. Okay, so even Bloomberg Commodity Index covers a lot of various commodities under this segment. Even before this, I think when I was writing, I was thinking whether this could be a divergent signal. So these are the two arrows that we have put in, the up arrow and also the down arrow here. So they are diverging, but the confirmation needs to come in. So as long as it is breaking new high and higher high, higher lows formation continue this manner, I wouldn't be too worried about the divergent signal. Although there is showing us some divergent signal, but we have to wait for confirmation. But this is not a confirmation for divergent signal, but instead it is actually a breaking new highs formation. So let's see how does it form throughout the next couple of quarters or weeks. But based on the trend right now, it is quite positive, and hopefully that it can still see some you can still use this chart to your own advantage. I think if this is continuing higher, then perhaps you might want to focus on commodity related counters. But again, when commodity is high, which means that inflation is also high, then people will start to talk about also when inflation is high, people will talk about the earnings margins to be squeezed. So that is another thing, because when you buy raw materials at a higher price, how are you going to sell to the clients at a normalized product? So you have to mark up your price according to maybe weekly basis, or how, if you can't cost pass through to your clients fast enough, then you incur some losses or incur some softer margins. So that is what people are afraid of as well. So Bloomberg Commodity Index shows us that, you know, if you are trading the commodity related counters or commodity related proxies, then you might benefit. But if you are thinking about the company perspective, they might be on margin erosion kind of concept. Okay, so these are two things that you have to, you know, juggle. Depends on what the media wants to paint the catalyst to you. So right now, seems like the inflation thing is actually picking up. Okay. So quarterly breakdown of CPO price is on the way up. So you can base on this to trade actually, or to invest in plantation counters. One way that I always think about is, because you know that the quarterly on quarter, year on year is higher. So it's very likely for the plantation counters to perform during all these quarters. Okay, throughout this this quarter, second, third quarter last year, and also recover back to this level or uptrend until this level here. So which means that they are very likely to register a very strong earnings. Okay, so how you are going to position yourself in this kind of companies is you just buy slightly ahead of their earnings. So whenever there is a breakout before their earnings during the normal months, like February, May, August, and also November, those are the times that they are going to release the results. You can position something into those companies, and hopefully that they can outbeat in terms of their earnings by a very strong margins and strong growth. Then perhaps this is some of the ways. Or the other way that you can actually look at plantation counters is that if they are making good money, good earnings, they are likely to pay dividends. So try to find those companies that are able to pay dividends as much as possible. Okay, so ahead of the results. So that is the idea here. So you don't want to hold on too long, but you know that their results is good, so you just buy something slightly ahead of the results. Okay. So just a brief summary of what has the 12 Malaysian plan talked about yesterday. Okay, so development expenditure is higher, so that would benefit the construction sector. 11 MP, which is the last Malaysian plan, it was only allocated around 248.6 billion. This round it is up 50%. So it is quite huge in number, and that would benefit the construction sector. So GDP growth to range around 4.5 to 5.5% within this 2021 to 2025. Average household income to reach around 10K by 2025. This is very important. I think if you take note of the last, later on I'll talk about this. Higher focus on renewable energy. This will benefit the solar related or hydro plant or whoever it is that is going into renewable energy. So higher focus here. Last time I think is they're talking about 25% to achieve 25% renewable energy versus total energy capacity by 2025. But right now they have increased to 31%. So which means that it is much higher compared to last objective or last goal that is set. So this is very important. So water sector transformation agenda to be introduced, 25.8 billion for water infrastructure, and this to tackle non-revenue water, and to also speed up 5G rollout. 15 billion is spent to invest by the private sector. And the last one, just now we have mentioned the average household income, and also the reduced economic gap between the federal territories, urban and rural areas, and to accelerate GDP growth in selected states. So if you talk about this narrowing gap, so if you can imagine right now we are maybe in Klang Valley versus Sabah Sarawak, so there is a gap here. So if we have to reduce the gap, either we bring up the Sabah Sarawak, or you lower down this federal territory. So if you can't lower down, because if you want to achieve the household income or a high income status by 2050 or whatever it is, you need to improve everyone together, right? So this Klang Valley is already high in that range. So you have to improve this. So in order to improve the Sabah Sarawak, Perlis, Kelantan, and Terengganu, how are you going to improve those states? So in order to improve those states, you have to bring in good opportunity, like in terms of high technological stuff. Maybe they can build technological park there. They can build some construction, mega projects there. So all these will actually bring up the gap. Okay, so if you think about this to narrow the gap, the economic gap together, therefore you have to think about they are going to build a lot of things within these 6 states. So you can actually focus on all these states. What are they lacking of? Are they lacking of technological stuff? Are they lacking of ports? Are they lacking of roads? If they're lacking of all these, then you can straight away think about how can we benefit from all these uh, you know uh, uh, poorer states in that sense lah. Okay, so that is what I want to bring out to you. So in order to bring out the whole nation together and to reduce the economic gap, you have to also bring up the states itself, whereby a lot of investment activities will be seen within these few states. So that is my idea. We can pinpoint something like that. Okay, towards that area of growth in that 6 of the states. Okay, so our strategy right now, since that we have because um, we have talked about all this market review. Right now, it's on the real part of strategy. How are we going to position ourselves? So before we go into this, I think just now I've seen we have hit around 300 viewers. So if you want to get more in terms of the winning price, I think you can actually share out this webinar to your friends and click the like button, click the share button, and it will bring up if we can bring up the viewers to 500, then the prize pool will be bigger. Okay, so that is the whole idea here. So right now we are going into the next agenda, which is the strategy, which is the important part of the portfolio that you are going to position yourself in 4th quarter or even in the longer term. Okay, so COVID-19 induced recession in 2020, we have marked negative 5.6% contraction. Right now, we are regaining momentum, so it is on track. So restarting the construction is crucial because we can't restart the borders. So in order to restart the economy, the best way is to focus on the domestic economy. So like tourism, like construction sector, like consumer spending. So this needs to restart and reboot, and we only have that domestic. We don't have the international portion to come in. So by that, construction is the best way to revitalize the economy. And based on the 12 MP, even more are going to spend in the next 5 years. So I guess the domestic economy will be one of the very main focus. And technology is also likely to be the winner. As I mentioned earlier on, the broader view of technology stocks or technology sector is human being will not stop advancing from this point, and therefore, based on that, we are expecting continuous technological advancement in terms of technology sector, and that will also continuously benefit our midstream companies in Malaysia. Okay, progressive 5G rollouts. This has been mentioned a lot of times, but right now they seems to be quite actively engaging in these 5G rollouts like Jendela, like My Digital, and DNB. Okay, so later on we'll talk about that. Recovery team is also going to be gaining attention, such as the aviation and also tourism. Okay, I think everyone has seen this chart here. We have we have went through phase 1. Right now going to phase 2, phase 3, phase 4. When phase 4 really happens, and that will be the interstate travel for most of parts of the for the states, and hopefully that we can have the international travel as well. So that will need the global effort. It's not only Malaysia only, but definitely we can look out for something like a travel bubble between countries. Okay, so what are the things that we can actually focus on? You can actually look out for these sectors and here as well. Okay, so currently I think only a few states, I think only one of the states are in phase 1, the rest is in phase 2, phase 3, and some in phase 4. Okay, so before we go into the main gist about what sectors, I just want to paint some idea that it's not doom and gloom in terms of KLCI for the next at least for the next 3 months. But I would say that if you want to really position yourself, I think you can position something ahead of the budget, because people will anticipate things to happen. And during November month, normally this is not as great, because you can see more reds than more greens. Then maybe you can actually pinpoint towards maybe the quarterly results is not as good. So that's why the earnings are not as great and the performance is not as great in the KLCI. So what you can do here is maybe you want to position in this October month, because over the past 20 years, they have been making average return of around 1%. And the best month actually for the FPM KLCI is the December month, which is the window dressing period. When there is window dressing period, and when that happens, a lot of times it will outperform the rest of the months. Okay, so this is the sort of the best month to be expected. Okay, small cap wise, you can see look out for October month, and November month is slightly on the weaker side, and December month is on the better side. So this is some of the strategies you can actually deploy during the final quarter. Okay, technology is also very interesting. October month normally is a good month. September month is normally a bad month. So we can also position that in that sense. But seems like a lot of people are talking about the yield spiking in the global position, taper tantrum. All these might contribute to the growth companies being beaten down. And you can see today what has happened in technology counters. Those are because people are shifting from some of the technology counters maybe towards oil and gas. They are repositioning themselves again. So this is how people move their funds. And December month is also a good month for technology. And industrial products, I think this I need to also mention, because they are also part of the technology stocks. So October and also December is a better month. Okay. So the catalyst out there is still the same old thing. We have 5G, we have Internet of Things, we have the EV to support, we have the so shortages of chips globally actually is one of the. It's also telling us that actually first of all, supply in disruption is there, but also to tell us that demand also is huge. So the work from home trend may persist for, I think most of the time right now will be on a hybrid mode. People can work in office, people can work at home. So definitely they will spend more in electronic equipments. I think IoT is very interesting because people are going into smart homes. People really are going to smart homes like switches, lights. All these will need all these chips in those things. On telco sector, what are the catalysts? Malaysia has set up the National 5G Task Force in 2018, and they have introduced Jendela in August 2020 to provide wider coverage and better quality of broadband experience to Malaysian. And it is supported by the recent digital economy blueprint by our previous PM, Muhyiddin. So I think Tan Sri Muhyiddin has also mentioned about this My Digital and also the DNB, Digital National Berhad, which is the one that is going to roll out the Malaysia's 5G network and infrastructure across the whole nation. Okay, so this is under telco sector. I believe it is very important for the next 5 years, because if we want to achieve the My Digital, the digital economy blueprint, we need a lot of good infrastructure in terms of the 5G or high-speed connectivity things. Okay. Construction sector, we have the 12 MP, 400 billion to spend till 2025. Vaccination rate has increased more than towards 80% and above, restarting already under the NRP. And budget 2022 is very interesting, that we believe that they might provide some goodies in the sector. Okay, building material proxy is proxy to the construction sector. I like companies under the concrete players and also precast concrete and also cement players. I still think that if construction works can restart, they will need a lot of more demand in terms of building materials, and that is going to benefit the industry. But again, recently, these past 2 weeks, steel sector in China is also having some issues due to the power crunch, and they can't really restart their factories as fast. And there is also some disruption in terms of the Evergrande issue. So which means that property sector is the one that is actually supporting the building material part, the steel and cement. But right now, Evergrande is an issue. Whether they can survive or not, that also will put either a dampener or exciting move for the steel players in China. So that has some variables, and recently there is some pullback in terms of steel companies in China. So that is why it is also having some not so positive sentiment in our local steel companies. But again, precast concrete, I still like them. Okay, transport logistics, I need not to talk much. A lot of shipping, delays, backlogs, they have to settle. They have to recover at full speed. Even Baltic Dry Index is at 11-year high, and continue to go up higher. So that is benefiting. Shipping industry like maybe Maybach. Okay, plastic and paper packaging. This is also part of our sectoral ideas, because plastic and paper packaging is definitely one of the main needs under this COVID-19 pandemic. Everything you go out, you need plastics. When you have buying online, all these shipments are through these courier bags. So these are a lot of plastics. Even you take away food, and also food delivery as well. So these are some of the things that's contributing to higher demand for plastic and paper packaging. So recovery team, I think aviation and tourism is part of parcel of recovery team, and seems like the vaccination rate is happening, and really we are looking forward to the phase 4, to hopefully hope that the pilot travel bubble project in Langkawi can actually replicate in other states or even other cities, not only in Malaysia. Then that would actually bring a lot of spending, spend tourist money to spend within Malaysia. That will also help the GDP. Okay, so yeah, I just want to talk about the oil and gas a little bit. Brent oil price is right now trading at $80, and this is definitely above the pre-pandemic level. And this is also because of recovery team. Everyone is talking about recovery team. Demand is picking up, and also is uh, all these contracts should be able to see some light after this crude oil environment stabilize. So whenever right now is fluctuating and people doesn't want to bring up contracts, that is why you can't really see a lot of contracts being dished out to oil and gas players, because it is not favorable. But maybe when time is favorable around US dollar 90, US dollar 100, then perhaps people will talk about that. But again, it is the narrative that people wants to paint to you. And right now, if they are painting a recovery, then that's good. But if they want to paint a recovery will hit the inflation higher, then that will also it is always a double-edged sword that you see in this recovery in terms of Brent oil, because when you have higher energy prices, which means that people are using higher costs and inflation is high, and that will eat into their margins. So again, it depends on what the media wants to paint to you right now. Okay, healthcare, we are looking to different segments, such as maybe gloves. It's slightly neutral to positive right now, because if we're talking about few quarters back, maybe it's still negative, but right now it has stabilized near around the pandemic level before the breakout. So I think valuation wise is attractive. Gloves might be hitting the bottom, and recently there is a lot also some some narrative talking about the China glove might also being hit by this power crunch. So it depends on how they want to position it. But again, it did bring up the sentiment in gloves right now. Although people say that you need to move away from gloves, but I think there are some potentials. There's some potential in glove sectors right now. Okay, full-fledged hospital, I think they might get more incentive going forward because of this COVID-19 pandemic. It has hit the healthcare system very much. So I think in the budget 2022, I think a lot more compared to last year budget will be spent into, previous years, it will be spent in the healthcare sector. So I think Ministry of Health might get higher allocation in terms of the budget. Okay, eye specialist is what we focus on because they are affected by the COVID pandemic. A lot of people delayed their surgeries. Right now, since that they are already living with COVID-19, recovery should be seen. So the footfall coming back to the clinics will be there, and hopefully this will bring up the surgeries done during the year. Okay, so sectors and stock picks I'll just briefly go through, and I will go to the stocks selection. Okay, technology side we have KGB, Chrono, Frontcan, Binacom, OCK, Rojas is under 5G related. I think these are some of the names that also prop up recently due to these all these towers that are going to build in Perak State. But again, when the 5G rollout is up and running, and they are talking about this in 12 MP, so hopefully that this could also bring towards the budget 2022 to really see the execution part. So 12 MP is actually setting the direction. So if there is a direction there, so we can actually look into budget 2022 to see what are they going to execute. But perhaps it's the same thing to improve wider coverage and build more towers for 5G related. All this will benefit Binacom, OCK, or Rojas. Okay. Construction, we like AME, AME Elite, Jax Resources. Building materials, I like Oka, SCG Berhad, and OMH. Plastic, I like BB Plastic. We have done a coverage on them. Transportation and logistics, we have AirAsia and Airport. I think Airport will benefit more compared to the aviation. Right now, aviation maybe is just internal travel within those interstate, like towards Langkawi or towards other states. But airport can be seen as because once there's travelers there, they can really the rental will the people will start to buy stuff from in airport and things like that. So so those areas, I think airport will also benefit under this structure on recovery team. Okay, so just take note of that. Healthcare, we have Optimax and Scomnet. I think both are attractive. Tourism, we have Genting Malaysia and Genting. Genting, you can view Genting as the international proxy. You can view Genting Malaysia as the local proxy. So local one, if you think about domestic, will pick up faster, then you buy Genting Malaysia. If you think that international will recover faster, then you buy Genting Berhad. So that is just the two different way of entering into two different space, because you can't, Genting Berhad owns a few casinos out there in US and UK. Okay, so AirAsia forming a base building formation, rounding bottom recently that has hit around the 1 ringgit and 10 cents, 1 ringgit and 11 cents. 1 ringgit and 9, 1 ringgit and 10 cents area, but it has pulled back significantly today. I think it was also due to the crude oil price that has been going higher, so that would also dampen their earnings. But they have not much of earnings, most likely to be losing. But the sentiment wise is definitely on the way up. Okay. Despite all this while they are having the losing quarter, but they are still performing quite well in terms of the share price. It did not go back to 50 cents at least. So right now it is around 89, then break out 96.5. So sentiment wise, definitely is positive already. So we are really waiting just for the international borders. Once they say yes, there is an international borders travel bubble to be set up within maybe Australia, Malaysia, maybe Malaysia, Thailand, Malaysia, Hong Kong, then it will start to bring up AirAsia. Okay, Jax Resources, they are not really construction player anymore. They are having construction, property, and also power related. And they have already signed some MOUs with Khazanah Sabah and also TNT Group in Vietnam through solar, hydro, and also gas-fired power solutions. So if you think about Jax Resources, they are actually benefiting out of this renewable energy. Over the years, they are into construction, but they have started to gain traction in terms of their how the plant in Vietnam. Okay, so I think moving forward, if we have put in a lot of emphasis in terms of the 12 Malaysia plan into this renewable energy, the signing of MOUs will definitely benefit them in terms of solar, hydro, and gas power solution. So those are the things that we are aiming for right now in our stock selection. So recently they are still holding around the double bottom formation area, which is around the 46 cents, 47 cents level. Hopefully there is a rebound in the near term, and hopefully that construction also will benefit them during the the quarterly, the budget 2022. And don't forget about they are also uh, tagging along with the water related sector much earlier. So when people start talking about the NRW, non-revenue water, then people will start to think about filters, NTAX, and JAX resources. Okay. Oka is I like them because of their very solid balance sheet. They are still making profits. They are, although it's small profits in 2020 during pandemic, but they are able to provide decent dividend yield. The dividend yield is around I think 4 cents or 2 cents throughout this period of time. So which means that they are already paying every year around 2 to 5 cents. So I think they have solid balance sheet, which means that it is in net cash position. They don't need a lot of that, so they are just waiting for the time to be seen, which is when the infra work starts, and they will be benefiting out of it. Okay. SCG cables, SCG Berhad Southern Cables Berhad. I think this involves in power and also communication segment. So think about what I've mentioned just now, the economic gap to narrow down from the Sabah, Sarawak, and Terengganu, Kelantan, and areas like that. So what are those? What do they need within that section? It is mainly power and communications segment. So if those are in need, one of the cable producers, such as SCG Berhad, can provide, then I think it should benefit from this point onwards. Okay, so I'm trying to position myself into thinking what is the current structure, that what do they need, what do these states need, and we position ourselves in order to meet the demand. Okay, so if those states needs roads, needs a hospital, needs all these infrastructure, 5G related, so those are things that they need, SG perhaps can provide, then that would be good. So later stage, they are also expanding, its products to automotive, elevator, and also communication industry. So these are the places also having high demand. Like automotive, maybe they can do EV cables, or just to say lah. Communication industry, maybe they can do LAN cables and things like that. So that would actually provide them a very good opportunities throughout the next 1 to 3 years. Okay. The other one is OMH. I think recently it is very actively traded due to some of the products that they are selling is actually at the rocketing stage, and still haven't seen the pullback yet. I see this as a very strong potentials. If you understand what they are selling actually ferrosilicon and manganese alloy, silicon manganese. And if you can check these two prices online or wherever it is something like this. Okay, it is something like this. Ferrosilicon is at this range, and silicon manganese in the China has already limit up for a few times, and today it went up higher. Although there is a sell down, but it went up higher. So what I'm suggesting here is that this has been just starting and hasn't really moved into that exponential move yet. So people are still discounting on this company. I would believe that, and I would see that there's very good opportunities to be expected out of this counter, especially if you know that silicon is actually the silicon metal is actually provide is actually a raw material for solar, for semiconductor, but they can actually produce, but they are not producing right now. Their main products is actually FASI and also SIMN. So these two already rocketed, okay, but the margins of the margins of if they are selling silicon metal, it's much higher, and the supply is having some disruption there. So what I'm suggesting here is that the downtime to change from this current product to the next product, it's very easy. The downtime is very small. So if they can actually transform their factory lines into that production, then this will not be at this price already. Okay, but the competitor, the nearest competitor that you can find in Malaysia is actually PMB Tech. PMB Tech has actually a silicon plant as well. So basically, PMB Tech is skyrocketed through the roof, but OMH is sort of a laggard, and OMH has a much higher capacity compared to PMB Tech. So I'm trying to position myself because the commodity prices is at a skyrocketing stage, strong rally in price, but the share price has not making that move yet. So I would suggest that people can start to monitor maybe around 250, 280, but I'm not too sure whether they can still come back to that level and rebound. But perhaps if you want to chase, I think it is good range of target around 420 or 469. But I'm expecting if they can should break out of these two range, then it should mimic something like PMB Tech as well. Okay, so this is something you can take note of. KGB still riding on the semiconductor super cycle. We have put in our third quarter stock picks, and also they are under the proxy towards the technology stocks. So that is why I would say that this company has proxy. They are not really too far in terms of the share price yet. So I believe that this might be still good for another run. Right now it's just consolidating, and hopefully that they can hit around 2 ringgit and 2 ringgit 20 cents. Our fundamental target is around 1 ringgit 90 cents level. Okay, and also they have a record high order book recently. They have secured around 400 plus million recently, and that propels their order book towards 900. So that should give them the earnings visibility for next 2 years. Chrono related to cloud data services, despite all these events in COVID pandemic, they are only registering one negative quarter in 2020, but the rest of the quarters are improving. So recently, they are also in an improved position of 5.1 million in second quarter 2022, and we have seen the recent statement of. So the recent statement about, sorry. Hi, can you see me? Okay. So they have seen the recent statement of them acquiring the stake into their subsidiary, and right now, if they can, I mean, they are already saying that they want to acquire it. So which means that they will get a profit guarantee of around 2 million, 2.5 for the next 2 years. So that is sort of good for them, and that would propel the earnings moving forward. So earnings wise, is there. The share price has not really moved yet. So let's see how does it pan out in this next few quarters. Sorry, next few weeks. Okay. So OCK, they are into two sectors. One is telco, one is RE segment. So again, we are talking about the renewable energy, and also renewable energy is a main focus for next 5 years. So they have been operating 17 solar farms. So that is great for them. They are also leveraging on this rollout in 5G. So perhaps that will also benefit them down the road of when they roll out more and more of these towers. Okay. Last counter will be Optimax. So they are one of the beneficiary under the recovery team, so-called, because under healthcare during the pandemic, no one are able, or no one are, unless you are very urgent, you will go in for surgeries. But if you are not urgent, you won't go in for checkup, you won't go in for cataract services. The cataract surgeries. And so that's why I think there is a very good amount of opportunity in Optimax. So they are also expanding. So when they expand, they will get more earnings in terms of surgeries done. And they are one of the leading specialists in Malaysia. Okay, so those are the 9 counters that I mentioned for this quarter. I think other than that, you can always receive our technical focus, which is we will provide every 2 to 3 counters per week, and that will be sufficient for you to trade for the rest of the quarters. Okay, so hopefully that I have shared enough right now. I will pass the floor back to Don, and I will take some questions later on, right?
All right. Thank you, Ruby, for those awesome insights. I think a lot of sectors, a lot of stocks we can look at. And also, we do have a lot of questions today. But before we look at the questions, let's put up the quiz one more time in case anyone joined late. Anyone don't know why everyone is saying A, B, C, D in the comment section.
Yes,
So
yes.
if you can put
What
it
is
up.
the price pool right now?
We're at 300 viewers, so the prize pool is at 200 plus the base of 200, so it's 400 total.
Oh wow, that's a
Yep,
lot.
yep. Yes, yes. Yeah, for just watching, you guys can stand a chance to win prizes. Isn't that good? A well spent Tuesday. All right, so yeah, this is a question. What is the target GDP growth rate of the 12 Malaysian plan? Is it A, 3 to 4%, B, 4.5 to 5.5%, C, 5 to 6%, or D, 6 to 7%? So put your comments in the comment section below because our team, they are still looking for who's the winner because we see some have answered the right answer, but we don't see the sharer mark on your comments. So do share public. Make sure your post is public when you share this video. All right. So let's get on to the Q&A session. And you guys can still drop some questions if you have any. Okay, so the first question, okay.
Yep.
Okay, I think you
Maybe you can
did
pick for me,
answer, yeah, you did answer some of this, but maybe we can go through it again. What are the economic growth drivers for 2022? Although we're looking at this next quarter, maybe we can just stick to the next quarter first. And will the tech sector continue its bull run? And another question, also same, will the uptrend be the same for the tech sector in 21, fourth quarter? So what do you
Yeah,
think about that?
I think tech counters has more room to go. Just that short term wise, we have some issues that ongoing because the narrative right now is pointing towards inflation and also energy being going up. All these will point to people moving out from growth companies to back to cyclical, and that will dampen the short term. But if you talk about long run, I think for 3 to 5 years or at least 1 year period, you would be able to see that tech will still continue to outbeat the market because in order for us to go through a strong phase of all this digitalization effort, technology will be the forefront of this. Like in the US, right? Top around I think top 20 counters that there are 10 counters are related to tech. So we hope that our tech companies will also go into FBM KLCI. Recently, there's a lot of talk about Inari, trying to go into FBM KLCI index as well. So in my view, if human being will not stop advancing in terms of the technological advancement, I would believe that tech will continue to outbeat the market. And what we can see from the heat map just now in technology stocks in October month and also December month, those are the best months for in the final quarter for the years or over the past 20 years. So I guess it is very clear cut that we can take some positions in the tech counters. And if you're looking into some um, counters to be to accumulate, one of them is KGB because we still think that KGB's earnings are still intact and they are also riding with the semiconductor phase and also 5G, whatever it is, IoT, they are riding along with that. So KGB is a proxy towards technology. But if you want to tap along with the real technology like semiconductor related stocks, maybe you want to look into those companies that are related to the global tech companies such as Apple, TSMC. So those are the names that you can actually refer to as well. Yeah.
All right, a follow-up question on tech stocks, right? Kelvin here is asking, will the tech sector see a bubble soon? Or should anyone be careful on this?
I think we shouldn't be too worried on tech counters. As I mentioned, there is always new demand in terms of technology. Like right now, we are talking about machine learning. We are talking about super maybe some supercomputer, or even your iPhone or your phone can become a supercomputer in the future. So there are still a lot of things that people needs, in terms of advancement, like even IoT. I've been thinking about how to make my home smarter. Like, do I need light bulb, switches, and things like that? So these are the areas that still needs a lot of improvements. And especially right now, we have EVs, electric vehicles, and all these will actually benefit technology. I don't think there is a stop towards this technological phase yet, because human being will not stop in advancing in terms of the technology. So I think it will continue to advance further. Yeah.
Yeah, I think so too. There's an ever growing industry, especially even during this work from home thing. It helped to push the bit all this in terms of
Yes.
technology. Yeah.
Yeah. Correct.
Okay, right. Okay, next question about this recent Evergrande saga. So will it cause like a global breakdown whatsoever? Something like Lemon Brothers in US? Lai Meng here is asking this question.
Yeah. It's a bit hard to foresee, but the banking sector has been quite strong in terms of their structure after 2008 crisis in the US. So if Evergrande saga is actually is bursting, I mean, for example, if it is bursting, so who will actually be more worried is actually the banks. So if the bank side, if China will support the banks and don't let the banks down, then the meltdown in terms of Evergrande will only be a one-off event. But if the China is able to support the banks, then perhaps it will not be it will not become a crisis anymore. So if they can stop it at the bank level, then we are quite safe. So it depends on how China wants to position themselves in this situation, to support the property or property player, or to support the bank. I think to support the bank is makes more sense, and that's why I think China might do that. But we also do not rule out that China might come into intervene in the Evergrande issue.
All right.
Yeah.
Next one. Okay, Andrew here is saying too many logistic company nowadays. If he were to go in, should we wait for a consolidation phase, or is it a good time?
Yeah. Mm, well, I think logistic companies will definitely come out with very strong earnings in the quarter going forward. I think at least for another 2 years, I think they are going to have very strong earnings. I'm saying this because I have not see stopping of this all these logistic companies going around town, and a lot of shopping, online shopping and things like that is going on. So I still think that logistic companies has the earnings, but the share price right now is reacting a bit on a sideways and consolidation phase. So if you want to trade on the companies, you might want to wait until slightly ahead or slightly before their earnings. Then you try to position yourself once there's a breakout. So that would be a more ideal manner to trade on this shipping industry. Yeah.
All right. So during your presentation at the start, you were saying on revenge on consumer spending and retail and all that. So I was thinking, what about revenge on traveling?
Oh,
Because that's
definitely.
something a lot of people thinking about right now. And
Yeah.
like you say, with Langkawi and all opening. So like
Yeah.
any counters in that?
I think when you talk about aviation travel, all this I mean, I will I will always position myself in this aviation for this sentiment. I'm not saying that they can make money, because when they sell tickets at 12 ringgit, 20 ringgit, or even 50 ringgit, I don't think they can cover the cost. But the sentiment wise will push the share price higher, definitely. So if looking at that kind of sentiment, revenge traveling is definitely there. Is a very valid and genuine catalyst. And when they snap the Langkawi 200,000 tickets until March next year, it's wonderful to say that people are willing to spend. Okay, although maybe it is cheaper than some bus fare to Penang or even JB, but again, the sentiment is there. So once they open up, they are saying to open up the Genting Malaysia, Genting Resort, and also Malacca, and also Pulau Kioman. So that would also bump up some interstate travel. Hopefully that people will travel more. So revenge traveling is definitely there. So AirAsia will be one of the picks. So that is why it is under our stock selection for tonight's topic. Yeah.
Okay, good to know that. I hope I can get my ticket soon.
Yes.
Okay. Yeah, since we were on the topic of AirAsia, someone actually commented, will AirAsia or AX go bust? Any chance they may privatize?
I can't say
Your
for
thoughts on it. Your thoughts
I
on
can't
it.
say for AirAsia X but I think AirAsia might be able to sail through this round of rocky
Very
waters.
rocky.
Yeah, rocky waters. I think what I can think about AirAsia is because AirAsia X definitely is the international borders. They can only travel to London or wherever more than 4 hours traveling. But AirAsia is within 4 hours region. So to open up a travel bubble within the 4 hour region, like to Thailand, to Singapore, to Australia, Australia is not 4 hours, but again, you can get an idea that when travel bubbles are within the Southeast Asia region can open up, then I guess AirAsia would be a much better pick compared to AirAsia X. So I can't say for AirAsia X because I don't know when the real international borders will open up. But at least for Asia, I can see the visibility. People are snapping the domestic travel ticket already. So I guess
Yeah, and there's talks on opening up with Singapore as well.
yeah. So that
Yeah.
that will be giving us an opportunity to look nearer to the travel bubble within the Southeast Asia region. That is more realistic target. Okay.
All right.
Yeah.
Okay. Actually, there's quite a lot of people asking on this next one, which was the talk of 2020, the biggest thing in 2020, growth stocks. What are the future for growth stock? And another person is asking, can they find their floor or will they continue to dive in this coming quarter?
I think when we talk about glove counters, you need to know what you are investing for. Are you investing for dividends? But dividends will also may offset by the dive in terms of share price. So what I would suggest people to do right now is to monitor for at least 2 quarters of stabilized earnings. If the earnings is right now maybe continuing downwards for the next quarter. But if following quarter is already stabilized, which is about the same towards the previous quarter, then I would say that the share price should be near towards the floor. But right now, it's already near towards the pre-pandemic level. So which means that it is near towards the floor, and we are just waiting for another catalyst, which is the flat earnings. If flat earnings means they have already stabilized, the Gulf ASP will not come down anymore, and they have stabilized, and that could be the position to re-enter again on Gulf stocks. So if you are expecting Glove to make 2020 kind of movements, I don't think that will happen. But if you are thinking about to position yourself in glove companies as an investment tool to get dividends, I think that is more possible. Yeah.
All right. So hope those growth investors were listening to that. Okay. What about banking sector? Hanson here is asking.
Okay, banking sector has been quite resilient during COVID-19 times, so I'm not too worried about them. Their earnings should be able to maintain. If they're not moving higher, I'm not too afraid they can't pay dividend. So I don't see any downside risk towards banking sectors. And in fact, right now we have contracted last year in terms of their of GDP, and this year we are slightly on the recovery path. So whenever there is recovery in GDP or economic activities, banking sector will benefit. So banking sector has been benefiting during COVID-19 pandemic times. And right now, moving forward, there is only recovering path for us. The downside risk is limited for banking sectors, and so you can position yourself with within those counters that can pay dividend, or you can look out for slightly more aggressive companies under the banking stocks for the the growth in terms of share price. So I think both make sense for now. So I think banking sectors is very steady going forward.
I see. Okay.
Yeah.
Okay, the next one here, Carson is asking on your opinion on oil and gas. So because there's no momentum right now, what's the looking forward?
I think for oil and gas today, there is a lot of actions. Just that we are much lagged compared to the crude oil price, because crude oil price has been rallying towards 76, pullback, and then recovering above 76 again a few days back. But there is no direction for oil and gas counters a few days back. But today, when the crude oil price surged above 80 US dollar mark, so that is a judgment call, judgment point for people to reinvest into oil and gas counters. So I think oil and gas counters will gain their momentum moving forward. The other thing that I just now I've mentioned a lot is whether the oil and gas companies is a pure oil and gas companies, or whether they are having the renewable energy arm within their segment. So if oil and gas companies, pure oil and gas players, I think they will start to look out for renewable energy assets. But if those already have the renewable energy assets under their their portfolio, they are more ESG compared to the rest of players, and they should perform much better compared to the rest of players. So that is how I look into oil and gas right now. Oil and gas is not the old oil and gas that pure oil and gas players, but they need the renewable energy asset in order to hit the carbon neutral kind of thing in maybe 2050. Even Petronas already mentioned they want to hit carbon neutral down the road. So if Petronas is already having that kind of view, I think oil and gas players have to change the view, change of their portfolio of or their asset right now from this point onwards. Yeah.
I see. Okay, okay. Okay, back to banking because someone asked about because in the recent months there were talks on like digital banking license and all that. Andrew here asks, what about the digital banking sentiment? Is it still there?
Digital banking sentiment is still there, but I don't think banking stocks will. I mean, not all need the digital banking, because digital banking is
Yes.
like for people that don't have the banking arm, they want something
Yep.
easier to set up. So digital banking could help them. So for banking stocks, I don't think they will. Banking sectors, I don't think they will need. Like even Maybank right now is they have already May, and all these banking
Yes.
already have their own transferring modes. So I don't think that there is a need for this digital banking. So for digital banking sentiment, I think maybe you can look into those payment gateways kind of companies like Revenue, MPay, GHL System. Those are quite attractive, I think, to get the digital banking license.
So there's still room for them to move.
Yeah, definitely. Because there is a need. I mean, there is a necessity for them to bring up the digital banking, because they are serving different parts of the consumers out there. So if for instance a lot of B40 cannot get the loan from banks, because banks needs a lot of all these credentials. But if digital banking for smaller players, they can serve like migrants or even B40 players, then there is a huge portion that they can actually cater to. So I think digital banking sentiment is still good, provided they are. It is easier to set up compared to a bank, so that's why digital banking makes sense for non-banking companies actually. Yeah.
Okay. We have a question here from Adam. What do you think of the recent US debt ceiling? What's your opinion on the situation?
I think you're referring to the Federal Reserve to maybe taper, right? So I think the taper tantrum will come in. It's a matter of time. But how fast they are tapering, then that is another question. But since that a lot of people are talking about this, even though the debt ceiling is there, but even though it doesn't comes down, it doesn't taper, people are already pricing into today's share price in US actually started to retrace a bit because of all these issues in terms of the Federal Reserve tone. So we need to understand what narrative are the media painting right now. So if they're painting that right now that ceiling is high, right now they need to reduce the bond purchases, then perhaps we will face a sell down phase. a correction phase in terms of the Dow Jones, Nasdaq, or even the S&P 500. But again, when we think about the bigger picture, when it started to rally since March 2020 until right now, it didn't retrace much, right? So which means that it might correct. It might be a very healthy correction phase instead of it might be a healthy correction phase instead of trend reversal towards 20-40% down. I don't see that happening yet. Okay, so I'm taking this as because even in 2013 or 2015 taper tantrum, when the share price retraced a bit, then it went up even higher later stage. So this is just a narrative that people wants to paint to you, but you have to really understand what is the reaction and where is the bottom that you can actually pick up the shares. Yeah.
Okay. Wait, there's a question here. I think we'll take this last question. Okay, the question is from Jonathan. Is Maybach a dry shipment company, and how would the container shipment delay affect them?
Well, actually, they are dry bulk company that they benefit out of these shipping rates. For the time being, if the rates BDI index is the rate, so if it is going up, they will have more earnings. So in the previous few quarters, that has benefited them. So I don't see any downside risk to them yet for the time being, because the BDI index is still high. That will translate to their earnings straight away. So that is how I just how I view it. So I guess I will always monitor for the BDI index instead of other things. So BDI index going up, the earnings should be going up, which is reflected in their previous few quarters result.
Yeah, I think it's something that I've been keeping my eyes on too. Maybach.
Yes.
All right, I think we've answered a lot of questions here today. Thank you so much for your time, Louis, to answer all the questions, and thank you for the audiences for asking. Okay, let's move on to the quiz. So show you guys one more time. We hit 300 viewers today, so we're adding 200 ringgit to the pool. So it's the 100 base plus 40 for the first prize and 50 plus 40 for the 4 constellation winners. Okay, so I think it's time to go to the answer, and I will give the honor of announcing the correct answer to Louis. So Louis, what was the GDP in the 12th Malaysian plan?
So I guess the answer is B, which is in my slides. And also, if you don't have the answer, you can always go back to Google. Google will tell you the answer as well.
Yes,
so the answer is B, 4.5 to 5.5%.
Yep. So let's find out who the winners are for today's giveaway. Let's have their names up. Okay, I think there was some technical error there. Hold on a second. Okay, there's a question here. Maybe we can take that first. If comparing Evergrande to Lemon Brothers, is it comparable, both of this?
I'm not too sure how to compare. One is a property company, one is a bank. So
I think maybe it's comparing on the debt. Is it comparing? Would you compare on the debt amount of debt?
But I think two are different things, because Lemon was. Lemon also under the property side crisis, but Lemon wasn't bailed out lah. I would say that, but I think Evergrande Evergrande issue is on the property side, but the banking has no issue. Banking structure is still quite decent. So unless banks will take the cut, then maybe China can put in some effort to help the banks. Then that would be that should resolve the situation lah.
So it's up to the government, we could say right now.
I mean, I hope the government will come in, because if the government will come in, then to help the banks, then it should support the whole ecosystem. Because if you let the bank down, then you have a very severe crisis, then you are hard to recover. So again, it's not a right or wrong situation, but it's how you want to save the thing. There's no right or wrong to this. Yeah.
All right. I think the error has been resolved. I think we can get the winners list up right now.
Great.
All right, let's see. Congratulations to our first prize winner, Lai Ming. You've won 140 ringgit.
Congratulations.
To the others, Seely, Wilfred, Vincent, and Wei Sheng, you've got 90 ringgit of Touch and Go e-wallet credit. So that's all you have to do. You just have to tune in to our webinar to win these prizes. Okay, so to the winners, do check out your inbox. Our team will message you soon on how to collect the prize. Okay, so for those who didn't win, don't worry. Tune in to our next webinar because we will still be giving away some e-wallet credit. Okay, and thank you everyone for tuning in. Okay, thank you, Louis, once again for your time.
No
And
problem.
hope
Thank
everyone
you.
will have a good evening and stay healthy and stay safe. Okay, we'll see you again next time. Thank you.
Okay, thank you. Bye bye.